Good day everyone. Today we are here to discuss to you the topic cash concentration. But first, let me tell you the contents of our report. The first one is benefits of cash concentration. Number 2 is cash concentration strategies. Number 3 is pooling concepts. Number 4 is physical sweeping. Number 5 is notional pooling. Number 6 is comparison of account sweeping and notional pooling. Number 7 is non-pooling situation. Number 8 is bank overlay structure. Number 9 is cash concentration controls. Number 10 is cash concentration policies. Number 11 is cash concentration procedures. And last, the summary. I would like to introduce to you myself. So my name is Franz Joseph G. Luanhati, the leader of the Group 4, and Nicole Ann Sambahon, the secretary, and my members are Hana Camila Deshar, Christine Joy Tungkol, Lady Chanel Villafranca, Rosemary P. Remerata, Altea May Tiranya, Bianca Marinay, Kimberly De Rosas, Mel Shirley Rebusquillo, and last, Rona May Mercadejas.
Good day everyone, I am Nicole Ansambahon and I will be discussing cash concentration and its benefits. Large companies like Johnson & Johnson, Procter & Gamble, and PepsiCo has a lot of subsidiaries or what we call subordinate companies. Therefore, marami silang bank accounts na kailangang i-handle at i-maintain. The question is, anong epekto nito sa cash management? Siyempre, kapag ang company ay maraming bank accounts, the treasurer will have a hard time controlling and tracking down all the account balances. Moreover, it will be difficult to know if the cash on banks are properly, effectively, and efficiently used and repurposed. Therefore, having a lot of bank accounts is inefficient in terms of cash management. So, what could be the possible solution to this? Simple. Cash concentration. When we say cash concentration, ito yung pagsasama-sama or pooling of cash from different accounts into a single and centralized account. So, we have two ways in pooling of cash. First is the physical sweeping kung saan yung cash from subsidiary accounts ay nililipat at pinagsasama-sama patungo sa isang centralized bank account. For example, yung cash sa subsidiary account A, B, and C ay lilipat sa subsidiary account D para mas maging effective at efficient ang pag-handle ng pera. Second way is through notional pooling. Dito, walang lipatan ng pera na magaganap. Instead, yung cash balances ng mga subsidiary accounts ay pagsasama-samahin sa isang master account. In short, yung records lang ang i-consolidate, not the actual cash. These two ways of pooling of cash will also be further discussed later on. So, let's move on to the benefits of cash concentration. We have 4 benefits. And the first one is the elimination of idle cash. Ito yung pag-iwas na matenga or matulog lang sa bangko yung pera. So if we use cash concentration, it will be easier to track kung kulang na ba yung cash natin sa bank or sobra-sobra. If we have too much cash idling in the bank, we can invest it on interest-earning vehicles such as stocks, bonds, mutual funds, and etc. Second benefit is the improved investment returns. Siyempre, kapag consolidated or sama-samang ating cash, it will be easier to plan kung ilang portion ng cash ang i-invest natin sa short-term, low-yield investment or sa long-term, high-yield investment. Whichever of the two, both will result to an increased and improved return on investment. Third benefit is more cost-effective oversight of accounts, or the use of software to automatically sweep cash balance from subsidiary accounts. Through the use of such arrangement, there's no need to manually review and track down subsidiary account balance. More importantly, labor costs will significantly reduce since the automation will do the work. Fourth benefit is the internal funding of debit balances. Bank accounts is usually covered by bank overdrafts. When we say bank overdrafts, it is the loan provided by a bank that allows clients or businesses to pay for expenses in the event of sudden charge or insufficient account balance. Going back, using cash concentration, high-cost bank overdrafts charge can be avoided. For better understanding, let's use an illustration. In the first case, ABC Company has bank accounts at 4 of its subsidiaries, Each of the accounts earns the same 3% interest rate on credit balances, while the banks all charge the same 8% rate on debit balances or for bank overdrafts. Subsidiary 1 has a credit balance of 100,000 pesos. It will be multiplied by 3% interest rate and the result is 3,000. Subsidiary 2 has a debit balance of negative 50,000 multiplied by 8% bank overdraft charge equals to negative 4,000. Subsidiary 3 has a debit balance of negative 35,000 pesos multiplied by 8% bank overdraft charge equals to negative 2,800. Subsidiary 4 has a credit balance of 75,000 multiplied by 3% interest rate and the result is 2,250. Adding all the cash balances in account, the total will be 90,000 and the company has to pay a bank overdraft amounting to 1,550. In the second case, ABC Company shifts all of its funds into a cash concentration account. Thus, the cash balance in account amounted to 90,000, avoided the 8% overdraft charge. Instead, it gained a 3% interest rate and reaped an annual interest amounting to 2,700. Hence, it proves that cash concentration is cost-effective and beneficial to large companies. For more information regarding the cash concentration and its benefits, you can visit the links provided on the screen. Up next is the cash concentration strategies to be discussed by the next reporter.
Good day everyone, I'm Hannah Camila Dushar and I'm going to discuss the cash concentration strategy. A company having multiple locations can pursue a variety of cash concentration strategies, which tend to bring a larger benefits with great centralization. The strategies are complete decentralization, centralized payments, decentralized liquidity management, centralized liquidity management, decentralized payments, and lastly, all functions centralized. So the first strategy is the complete decentralization. Every subsidiary or branch office which is own bank account manage its own cash position. This is fine if balances are small, so there is a little synergy to be gained by concentrating cash in a single account. However, if cash balances are languishing in some accounts or other accounts are incurring overdraft charges, then a more centralized approach is called for. A more advanced version of this strategy is to centralize accounts in the country of currency. Like for example, dollars are kept in the United States and yen are kept in Japan. So this alternative is transactionally efficient but does not sufficiently centralize cash for investment purposes. In simple words, this complete decentralization refers to the financial strategy where an organization allows its individual business units or subsidiaries to maintain control over their cash balances, and the process of consolidating or concentrating the cash balances is performed at the local or unit level. This approach contrasts with centralized cash concentration, where a single central treasury department consolidates and manages cash balances from all units subsidiaries of the organization. Next is the centralized payments, the centralized liquidity management. A company can implement a centralized payment factory that handles all payables for all company subsidiaries but issues payment from local accounts. So this improves the overall planning of cash flows but does not improve the management of the excess cash balances, for which local managers are still responsible. Also, if investments are managed at the local level, there is a greater risk that the corporate investment policy will not be followed. So, in simple words, the centralized payments and the centralized liquidity management refers to the financial strategy that combines the elements of centralization and decentralization within an organization's cash management approach. So this approach aims to optimize cash flows and liquidity while balancing the need for control and flexibility. For example, a central treasury department can centralize payments to improve efficiency and control while enabling the business units to maintain control over their cash balances and short-term investment decision. So, the central treasury may periodically consolidate cash positions, ensuring that excess funds are pooled and efficiently invested. Number 3 is the centralized liquidity management, the centralized payments. So, the treasury staff centralize cash into a concentration accounts and has responsibility for investments. However, local managers are still responsible for disbursements. So, in simple words, the centralized liquidity management with decentralized payments strategy is central treasury function takes on responsibility of consolidating cash flows, optimizing liquidity, and managing investment on behalf of the organization. Meanwhile, the individual business units and subsidiaries retain control over their payments process and day-to-day financial operation. Lastly is the all functions centralized. So the treasury staff pulls all cash into a concentration accounts, invest it, and manage the disbursements. This is an excellent structure of optimizing investment income and gives the treasurer considerable control over the accounts payable portion of the company's working capital. The larger companies usually follow this strategy but may not be carry it through cross-border centralization. Instead, they may centralize manage key currencies such as euros and dollars while allowing regional control over other currencies. So, the concept of all functions centralized in cash concentration refers to the financial management strategy in which an organization consolidates and centralizes all aspects of its cash and treasury management function into a single central treasury department or function. So under this approach, the central treasury teams assumes control and responsibility for a wide range of financial activities, including cash collections, disbursements, liquidity management, investment, risk management, and more. So in case where cash is invested from the central location and multiple currencies are involved, it may be necessary for the treasury staff to invest funds locally because of the legal or foreign exchange restrictions. So the final of this strategy is the most efficient approach for cash concentration, but it may not be the most cost-effective. If a company has relatively few subsidiaries with low accounts balances, then creating a central treasury staff to manage the cash may add more overhead than will be offset by increased interest income or reduced interest expense. That will be all. Next reporter.
Good day. I will be talking about the pooling concepts. So, cash concentration necessitates the establishment of a cash pool by a business. This is made out of group of subsidiary bank accounts and a concentration account. Under the physical sweeping approach, funds physically move from the subsidiary accounts into the concentration account. And alternatively, cash balances in subsidiary accounts can be focused exclusively in the master account inside the bank's records, leaving the cash in the subsidiary accounts. If pooling arrangements include accounts located in more than one country, This is known as a cross-border cash pool, and a company may elect to pool cash within the home country of each currency. Like for example, US dollars are pooled in United States. So US dollars is the currency of the US, and which is known as the single currency center model. If a company pools all of its foreign currency accounts in a single location, this is a multi-currency center arrangement. And multi-centers are generally easier to manage, but transactions are more expensive than a single currency center model because um, multi-currency, it has a different transaction, like it has more transaction than the single currency center model. That's all. Thank you.
Good day everyone, I am Lady Shana Villafranca and the next topic is physical sweeping. Physical sweeping is the movement of cash from multiple bank accounts into a single concentration account. This is typically accomplished with a zero balance account from which a bank automatically sweeps all cash at the end of the day and into a concentration account. So in the example, two of three subsidiary accounts initially contains credit or positive balances and account C contains a debit or negative balance. So as you can see, the concentration account have a $0 initial balance. The first stage of sweep transaction, the cash in the two accounts having a credit balances are swept into the concentration accounts and the balance becomes a $35,000. So in the next stage of sweep, sufficient funds are transferred from the concentration accounts to offset the debit balance in account C, which is negative $5, and the concentration accounts becomes a $30,000. At the end of the sweep, then, there are no credits or debit balances in the zero balance accounts. It is also possible to use constant balancing to maintain a predetermined minimum balance in a subsidiary account, which involves sweeping only those cash level above the minimum balance and reverse sweeping cash into the subsidiary account if the balance drops below the minimum balance.
Good day everyone, I'm Rosemary Feira Merata and I will going to discuss the notional pooling under Chapter 4 Cash Concentration. Notional pooling is a cash management strategy used by the large corporations to optimize the efficiency of their cash flow and reduce interest charges. Ang notional pooling daw ay isang strategy na kung saan ginagamit ito ng mga large corporations upang maging mas epektibo and well-organized ang paglabas at pagpasok ng funds nila and at the same time, mababawasan ang interest charges ng isang corporation. Ito rin na isang process para makalculate yung interest ng parehong credit and debit balances ng accounts na piniling pagsamahin ng mga corporation without transferring any funds physically. In notional pooling, multiple bank accounts, usually nakaspread ito across different subsidiaries or divisions with a corporation, are combined para sa purpose na makalculate yung interest. Pero yung mga accounts nila ay naka-remain na separate. So, ang bawat account within the notional pooling ay makaka-receive ng interest based sa kung ano yung contribution nila sa total pool. Like for example, kapag ang subsidiary A ay naka-earn ng 30% sa pool interest, then yung same amount ng money na yun is makaka-receive din. Same din siya kapag nai-apply sa charges for deficit. This approach allows each subsidiary company to take advantage of a single centralized liquidity position while still retaining daily cash management privileges. And also, since iniiwasan nito yung paggamit ng cash transfer sa central pooling account, wala na itong hindi na kailangan na mag-create or i-monitor pa ng intercompany loans. Next. Advantages of notional pooling. So, una dito is the lower cost. Notional pooling systems definitely have a cost advantage as compared to others such liquidity management arrangement. For instance, ang paggamit ng notional pooling ay mas mababa yung charge fees na binabayaran compare sa iba pang type ng cash pooling like physical pooling. Since wala nga itong nilalabas na kahit na anong funds physically. And also, yung cost of overdraft payment o yung labis na funds na nilalabas mo compare sa funds na meron ng account mo, which is nare-reduce siya ng dahil sa notional pooling. Like for example, kung ang isang corporation ay may 10 accounts and lahat yun ay may positive net balance, hindi na siya makaka-charge ng overdraft fees. And kahit na ang iba mong account ay may negative balance, ay hindi na rin magbabayad ng fees ang corporation. Next is the convenience. The notional pooling system is very useful for the Treasury Department of large companies. This is because of the fact that companies do not have to ensure that each amount has the required balance. So, mas convenient and useful ang notional pooling para sa mga Treasury Department kasi hindi na nila kailangan i-make sure kung ang bawat amount ay may required na balance na dapat sundin as long as hindi ma-overdraft ang account ng isang corporation. And also, kahit na ang overall net balance ng isang corporation ay positive, hindi na nila kailangang magbayad ng interest charges. Basta yung mga administrative activities is required na i-ensure na ang lahat ng bank accounts na may required funds ay dapat ma-eliminate or mabawasan. Kaya, mas maraming mga large corporations ang na-attract na gumamit ng notional pooling. So, next is the cross-currency pooling. Some banks even offer notional pooling across various currencies. In such cases, the corporation is able to save a lot of money. This is because they are not required to actually exchange or ipagpalit yung isang currency sa isa pang currency. Hence, there are no transaction charges that the company has to pay. And sa ngayon, alam naman natin na yung pagpalit ng currency to other currency is mataas na. So, the ability to avoid these charges is quite useful for the company. And next is the use of notional pooling is not a long-term commitment. Meaning, hindi pang matagalan ang notional pooling, lalo na kapag ang funds na nai-transfer mo sa isang subsidiary or sa isang bank account is nagbibigay sa'yo ng higher interest charges. And on the contrary, it is relatively easy to back out, meaning pwede mo siyang iwan or pwede ka mag-back out sa kung ano yung nakapagkasunduan mo between the banks. Next. Disadvantage of notional pooling. The main downside of notional pooling is that hindi siya allowed sa ibang countries, especially sa mga countries ng Africa, Asia, and Latin America, though it is very common sa Europe. Like for example dito sa Asia, based sa research ko, Japan is meron silang notional pooling pero hindi nila laging ginagamit. It is because yung tax implication nila is hindi pa clear, hindi pa klaro sa kanila. And kapag gumamit sila ng notional pooling, mas magiging komplikado ito sa part ng Treasury Department nila. And pwede ring makasira ito sa economic na meron ang Japan. And physical cash sweeping is the most common alternative na ginagamit ng ibang bansa. Also, the precise form of notional pooling arrangement will vary according to local laws. So, nakadepende nga sa batas na meron ng isang bansa kung pwede nilang gamitin yung notional pooling. Pero yung ibang countries naman, inaalaw na gamitin yung cross-border pooling. And then yung iba naman hindi. In addition to the provision against notional pooling in some countries, mahirap siyang hanapin pero ang large multinational bank na nag-o-offer ng cross-currency notional pooling. Instead, it is most common to have a separate notional cash pool for each currency area. So, next reporter po.
Good day everyone, I'm Altea May Oteranya and I will discuss the comparison of account sweeping and notional pooling. So the previous reporter discussed the account sweeping and notional pooling. For now, let's go to the comparison. So comparison of account sweeping and notional pooling. Where there is a choice between account sweeping and notional pooling is usually the better alternative. So, bakit nga ba siya naging better alternative? So, i-discuss natin siya. So, the first one is under notional pooling, cash does not physically leave the bank accounts of each subsidiary, which greatly reduces the amount of intercompany loans that would otherwise have to be recorded. This eliminates the treasury overhead costs that would otherwise be associated with tracking and recording the intercompany loans. So, dito, it is a better alternative because it's not like the account sweeping na yung cash is actually moved into a concentration account. Kasi nga, di ba, better alternative yung notional pooling kasi funds are not actually transferred, but also information is reported as though physically sweeping had occurred. So if the parent company allocates interest earned to its various subsidiaries based on their cash balances, this requires significant accounting resources to calculate the interest income allocation based on intercompany loans and deposits. In multi-currency situations, this involves revaluing the interest income into different currencies. However, in a notional pooling environment, the bank may be able to automate the calculation of interest with a physical transfer of funds at month end to pay out the interest income to each subsidiary. Parang dito mababago din yung interest depende sa currency like peso, euro, dollars like that. Pero sa notional pooling daw, pwede ito i-automate na ng bangko yung interest or parang sila na yung bahala. So the next one is if the intent is to pool funds denominated in multiple currencies, account sweeps require the use of foreign exchange transactions and possibly hedging. Notional pooling eliminates these activities since funds are not shifted from one currency to another. Kung yung intention ay ipunin or pagsamasamahin yung funds na napapalit sa maraming currency like ngayon dollar, peso, euro, nagre-require itong gumamit ng foreign exchange transaction or possibly hedging. Di ba yung hedging is a risk management strategy employed to offset losses in investments by taking an opposite position in related asset. Yung notional pooling naman hindi na kailangan ng ganon since hindi naman pinagpapalit yung isang currency sa iba pang currency or hindi pinapalit. So the next one is the notional pooling is more likely to be supported by the managers of local subsidiaries since it means that they retain control over their cash balances. So because of that, they may not even realize that a notional pooling arrangement has been created. For the last one is a major disadvantage of notional pooling is that it is illegal in some countries. Thus, notional pooling should be taken advantage of where it is offered. When not available, physical sweeping or the account sweeping is a very acceptable alternative to conducting no cash concentration activities at all. So, national pooling system is hindi siya pwede sa ibang countries or prohibited siya. And it is impractical in others where banking systems are not sufficiently integrated to allow for the virtual aggregation of funds. Yung reason niya kung bakit illegal siya sa ibang countries, yung national pooling dahil yung ibang government is naniniwala na yung national pooling is a co-institute or a commingling of fund. Ito yung tinatawag na mixing of funds belonging in one party to another party. So, the notional pooling is allowed lang siya in the European countries, but it is not allowed in the United States. And that's all. Thank you.
A company may need to use a local bank that cannot be linked into its corporate account sweeping or notional pooling structures. Ang mga balanse ng account ng isang company ay dapat mano-mano ang pamamahala, and ang first priority ng account na to or ng non-pooling ay para maiwasan yung mga overdraft, dahil madalas sa isang company mas malaki ang gastos kaysa sa kita ng interest na kikitain sa parehong account. For this, mas effective siya sa mga excess balance sa mga account kaysa magkaroon ng mga bayad sa overdraft. If there are to be cash transfers out of such accounts, they tend to be infrequent. Mas gugustuhin ng isang kumpanya na mapanatili ang sobrang balance ng pera para na din maiwasan ang mga overdraft at ma-siphon off kapag may malinaw na sobra na pera. Dahil nga mano-mano ang account management, it is more cost-effective from a labor's perspective to limit the number of transfers into or out of these accounts.
So next is bank overlay structure. Companies operating on an international scale frequently have trouble reconciling the needs for efficient cash concentration operation with the use of local banking partners with whom they may have long-standing relationships and the valuable business contacts. The solution is the bank overlay structures. So bank overlay structure means that it is a tool used in the consolidation of money at global and regional levels, whereby it allows the centralized management of money. A bank overlay structure consists of two layers. The lower layer is comprised of all in-country banks that are used for local cash transaction requirements. The higher layer is a group of network regional banks or even a single global bank that maintains a separate bank accounts for each country or level entity of the corporate structure. Cash balances in the lower layer of banks are zero balance into the corresponding accounts in the higher layer of banks on daily basis, where possible, subject to cash flow restrictions. These sweeps are accomplished either with manual transfer with sweeps message from the network banks to the local banks, or with standing authorization to local banks. This approach allows funds to be consolidated on either a or regional or global basis for centralized cash management. That's all. Thank you. Next reporter.
Good day everyone, my name is Kimberly and I will be discussing the cash concentration controls under the chapter 4 cash concentration. As we all know, cash concentration is a banking solution that allows you to effectively manage your company funds from multiple accounts so that you can increase your investment potential and possibly reduce your need to borrow in order to grow your business. We also know that cash concentration helps optimize liquidity management by consolidating funds into central account. This provides a clear view of the available cash and allows businesses to allocate surplus funds effectively by reducing idle balances and maximizing investment opportunities. There is a strong argument that having a physical swept cash concentration system in place is a control, since it pushes all cash balances into a single location for easier monitoring. Otherwise, the treasury staff will be faced with a large jumble of accounts, over which might exercise little control. Nonetheless, the following controls can improve on inherent control of the physical swept system. One of it is the review target balances. If the subsidiary account is allowed a cash target balance, then periodically review account usage to see if the target balance is appropriate. Second one is review excluded account. Some subsidiaries accounts may have been excluded from the swap on the grounds that there are local currency restrictions or that minimal transaction activity does not justify a periodic swap. These factors may change over time, so schedule an annual analysis of excluded account. Third one is compare intercompany loan rates to market rates. If the company uses non-market interest rates when calculating intercompany charges, it may run on a full amount or a transfer pricing rules in some tax jurisdiction. Thus, create a tracking procedure to periodically compare market rates to the intercompany loan rates. Fourth one is verify the allocation of interest income to subsidiaries. Depending on the circumstances, it may be necessary to allocate interest earned back to the subsidiaries. If so, verify that the calculation is consistently applied across all subsidiaries. Fifth one, verify the calculation of intercompany loan balances. A company using physical sweeping may need to record intercompany loan balances to reflect the shifts in cash to the corporate consolidation account. If so, have the internal audit staff periodically verify the calculation of these balances. This review can impact the amount of interest expense or income allocated to subsidiaries. While a notional pooling system does not create an inherent control over physical cash balances, as was the case with the physical swap, since cash is still sitting in what may be a large number of accounts in multiple locations. Thus, all controls normally exercised over a bank account would be in effect in this situation. The primary change with notional pooling is the presence of interest income distributions back to the originating bank accounts. This calls for the repetition of preceding control, which is first is verify the allocation of interest rate to subsidiaries. Depending on the circumstances, it may be necessary to allocate interest earned back to the subsidiaries. If so, verify the calculation is consistently applied across all subsidiaries. The receipt and disbursement of cash involve intricate controls, which are beyond the scope of this book. For detailed cash controls, refer to the author's account. Control best prices on second. These controls noted here were specific just to cash concentration function.
Good day everyone, I am Shirley Jane K. Robusquillo and I'm going to discuss the cash concentration policies. There is one key policy required for cash concentration, which is one that places responsibility for cash concentration on a specific group within the company. Otherwise, it can be extremely difficult to exert central control over power plant accounts that are normally under the control of the managers of local subsidiaries. The policy follows: all cash concentration activities shall be managed by the Corporate Treasury Department. This can be a surprisingly important policy in a larger firm where divisional managers may attempt to retain control over their bank accounts. The policy clearly places responsibility for cash concentration in the hands of the Corporate Treasury Department. Of course, a deliberate decentralization policy could revise the preceding policy to state that the cash concentration activities are limited to a lower level within the company, such as at the division level. It is also possible through not necessary to state the company's cash concentration strategy with a policy statement. Doing so certainly clarifies the company direction in this area, but also requires a subsequent policy change if the treasurer wants to turn in a different direction. Strategies for both small and large companies are noted in the following two policies. 1. Small company policy. The company shall engage in cash concentration with a physical sweeping strategy. All subsidiary accounts shall be designated as zero balance and shall sweep into a concentration account, which in turn shall also be used as a central disbursement account. The treasurer may exclude accounts from this strategy if sweeping is not cost-effective. This policy works well for smaller entities using a single currency in location where notional pooling is not available. Next, large company policy. The company shall engage in cash concentration with a cross-currency notional pooling strategy. All subsidiaries are restricted to accounts with a bank designated by the treasurer. In areas where notional pooling is not available, the treasurer may opt for physical sweeping or no sweeping if it is not cost effective. This policy assumes that notional pooling will be organized under a single global bank and provides for the inevitable exception that will arise in some jurisdiction. It is not necessary at the policy level to define any greater level of detail regarding cash concentration, such as the allowable method of cash transfer for physical sweeping. These are the tactical issues over which the Treasury staff should have discretion.
Good day everyone, I am Ronami P. Mercadejas and I will be discussing Module 4 Cash Concentration Procedures. So, cash concentration procedures. Once a cash concentration system is set up, the system should be fully automated with cash balances either shifting to a concentration account with a physical sweeping or appearing in a notional account with a notional pooling arrangement. Thus, there is no need for a procedure to conduct the cash concentration. However, procedures are needed to track intercompany loans and related interest expense allocations if physical sweeping is used, as well as to allocate interest income back to the subsidiaries. So, cash concentration procedures is a corporate treasury management technique involving the transfer of all funds from different accounts to a single centralized account to increase cash management efficiency and reduce fees. These are numerous advantages to concentrating all available funds into a single account. And also, cash concentration procedures have a purpose and scope. This procedure is used by the Treasury staff to determine the amount of intercompany loans caused by the sweeping of cash from subsidiary accounts into the corporate cash concentration account, as well as the amount of internal charge related to these loans. So, cash concentration procedures have 8 record intercompany loans or treasury staff. Number 1, at the end of each month, access the company's bank statements and calculate the amount of intercompany loans outstanding from each subsidiary to the corporate entity that was caused by physical sweeps into the corporate cash concentration account. Add to this amount the balance of any intercompany loans that were outstanding at the beginning of the month. Number 2, subtract from the revised intercompany loan balances the amount of any expenditures related to each subsidiary for disbursement from the corporate shared services centers to payroll and disbursement. 3. Subtract from the remaining intercompany loan balances the amount of any cash flows from corporate to the subsidiaries for other purposes such as debit balance replenishment. Number 4. Calculate the incremental change in intercompany loan balances and create a journal entry to reflect the change. If there is an increase in a subsidiary's loan to corporate, then this is a debit to their notes receivable account and a credit to corporate loans payable. If there is a decrease in subsidiary's loan to corporate, then this entry is reversed. Number 5. Also, calculate the average loan balance outstanding during the month, which is calculated on a daily basis or by adding the beginning and ending balances and dividing by 2, which shall be used for subsequent allocations of interest income or expense. Number 6. Retain a copy of the calculation for use during the next month's calculations. Number 7. Forward the intercompany loan calculations to the treasurer for approval. Number 8. Forward the approved calculations and journal entry to the general ledger accountant for entry into the accounting system. So next, cash concentration procedure is 2.2, allocate interest expense. Number 1, determine the market interest rate on a debt, which is monthly interest rate charged the company on its primary line of credit. Number 2, calculate the intercompany interest expense to be charged to corporate for use of subsidiaries funds and credited to the subsidiaries based on the market interest rate multiplied by their average intercompany loans outstanding during the month. Number 3, create a journal entry to reflect the interest expense, which is debit to the corporate interest expense account and a credit to the subsidiaries interest income accounts. If there is a net flow of cash of a subsidiary, then this entry is reversed. Number 4, retain a copy of the calculations. Number 5, forward the interest expense calculations and journal entries to the treasurer for approval. And lastly, number 6, forward the approved calculation and journal entry to the general ledger accountant for entry into the accounting system. Exhibit 4.5, Interest Income Allocation from Cash Concentration Account. Number 1, Purpose and Scope. This procedure is used by the Treasury staff to calculate the interest income earned from the investment of cash concentration activities, less administrative charge. 2.1, Calculate allocable interest income, Treasury staff. Number 1, summarize interest income earned for the month as reported on investment statements. Number 2, record the interest income as corporate income with a debit to cash and credit to the interest income account. Have the entry approved by the treasurer and forward it to the general ledger accountant for entry to the accounting system. And number 3, calculate the amount of administrative expense that is associated with the administration of cash concentration and subsequent events investment activities. These should include bank pooling fees and loaded labor expenses. Compare this expense to the amount for previous months to establish the reasonableness of the amount. 4. Subtract the administrative expense from the total interest earned. Number 5. Allocate the remaining interest earned to the subsidiaries based the proportional average amount of intercompany loans they had outstanding to the parent company during the month. This is a debit to the corporate interest income account and a credit to the interest income accounts of the subsidiaries. Number 6. Combine the interest allocation, administrative fee calculation, and copies of investment statements into a package and retain a copy for backup purposes. Number 7. Forward the originals of the package to the treasurer for approval. And lastly, number 8. Forward the approved package to the general ledger accountant for entry into the accounting system. And that's all. Thank you.
To sum up the topics that discussed by members, let me discuss to you the summary of our report. So, the decision to engage in cash concentration activities must be made by the company. The organization must have sizable continuous balances in numerous accounts that are not being invested effectively for it to be cost effective. Additionally, the incremental rise in pooling fees and administrative costs should be outweighed by the incremental decrease in overdraft fees and increase in interest income. So, the managers of local subsidiaries' willingness to allow corporate meddling with their bank accounts is another immaterial consideration. If this analysis is favorable, the business should start cash management efforts. And physical sweeping is the theoretically preferable to notional pooling, but both approaches are far superior to none at all. Additionally, manual sweeping is not advised because it moves money across accounts. A lot of manually started transactions are needed. Because of the level of automation involved, it is necessary to utilize a major bank with a wide range of automated services. A small local bank is unable to help a corporation with several locations with their cash management plan.